let's get some reaction to this. Michael Wayne from Kodari Securities joining us live from our Sydney CBD studio. First and foremost, thank you for your time. Can we get your thoughts on QBE fighting back against this class action and just some colour on what's been announced today?
Yeah, look, I mean, QBE, it's a general insurer. The fact is that any investor getting invested into a general insurer can expect this sort of volatility. That's my opinion anyway. I haven't seen the detail of the claim. I'm pretty sure QBE just received it this morning. So anyone investing in these sorts of companies, given the unpredictable nature of natural weather disasters, you tend to get volatility in revenue, in earnings, these underwriting situations. So it's not that surprising to see volatility in earnings. It's quite a unique case, and it's something that we're not really that across, but we'll leave this one to the lawyers, I think.
Watching that closely. Let's get your thoughts on the market and the session underway as well. As I mentioned just a short time ago, off by about 2.1%. Talk us through what's leading the losses.
Yeah, look, I think it's just a continuation of this volatility. We've had a very strong 2 days, moments of euphoria followed by moments of desperation. We've got a big sort of data week next week leading up to the Federal Reserve interest rate decision. We've got the Bank of England also having an interest rate decision next week. So we can expect probably volatility to continue for the immediate term at least. So I think it just makes sense just to be patient, make sure you keep that cash aside, a little bit of cash aside, to deploy when the opportunity does present itself, because it's not really surprising to see the markets give up a lot of the gains they've picked up in the last couple of days. It was almost as though China went on a public holiday, then the US had a public holiday, and everything was solved, but unfortunately it's not the case. We've got a lot of data to come out over the next week or so. So this is a continuation of this volatility.
So are you of the view that it's still pretty important to be keeping some cash on the sidelines as we make our way through all of this volatility?
Yeah, I think so. There is certainly an elevated risk to the downside at the moment. There are certainly still fears of a consistent slowdown globally. The markets could easily continue their fall away to the 49, 4,700 mark, probably worst case scenario. And that's if we do sort of overshoot to the downside and we do see a capitulation. I'm not saying that's going to happen, but you'd be kicking yourself if it did happen and you didn't have any ammo up your sleeve.
So are you buying anything at the moment though?
Oh, look, we still like the good quality healthcare businesses such as your CSLs. We are keeping a close eye on the diversified financials, things like your Magellan Financial Group, your Henderson Group, even your Macquarie Group. We quite like them. Obviously, they benefit from the falling Australian dollar. And when global markets do eventually settle down and we do see a pickup in equity markets around the world, it's those diversified financials that should benefit the most. So at the moment, we've got some positions in those companies, but we're probably looking to pick up more once the opportunity does present itself.
So, Michael, what do you think it would take to clear the air from this point on? Obviously, we've got that Fed meeting only days away, really. Thoughts on that, and also what would it take to, I guess, ease up some of the volatility that we had seen? Do we need to see further stabilisation in China and the Fed finally moving on rates?
Well, I think just the Federal Reserve interest rate in itself, perhaps the statement that came out after that as well. Just a bit more data to come out of China today. CPI figures are probably quite a good thing as well, showing that things aren't completely capitulating in that economy. So I think that the interest rate decision, just let it come and pass. I think the markets can then sort of just relax and know that that's all behind us for the moment.
Now, the stock we're watching today, Atlas Iron, it's also captured your attention as well. It's up 4.8%. Small recovery in iron ore prices helping to boost margins for Atlas Iron. But what's your long-term view on the business?
Yeah, look, it's a marginal producer. The fact is the iron ore price has recovered a little bit, so it is slightly profitable at the moment. But all it takes is the iron ore price to come back down a little bit and they turn into a profit, a loser, or they're not making any money, negative profit. We're cautious on the overall space. Over the last 30 years in this country, there's been an enormous amount of capital expenditure into the mining sector. A lot of that supply is just beginning to come online as demand from the rest of the world is beginning to stagnate, or the increase in demand is beginning to slow. So the fact is, it doesn't matter if you're BHP with the best assets, the best management team, you're a price taker in that, especially if you're a one commodity producer like Atlas Iron. You're a price taker, and all it takes is a big increase in supply like we're seeing, a slowdown in demand growth, and the prices start to come under pressure. So being a mid or high cost producer, they're really going to struggle, particularly even if the BHPs and the Rio Tintos and the Fortescue Metals of this world are struggling. It's not one that I'll be looking at, and I wouldn't be really looking at the sector at the moment either.
Interesting. So they've come out today saying shipments have risen 33% on month. Also commentary from the executives. David Flanagan, the Atlas CEO, pretty respected voice over in Perth. He said today that there is a good chance that iron ore prices will continue to rise during the remainder of 2015. Would you agree with that, or is he being overly optimistic?
Well, last things that I read, the steel mills in China are quite full. I know there has been in the past a historical trend towards the end of the year in these iron ore prices, but the fact is the iron ore price is very, very depressed, and they are right on the cusp of being profitable at the moment. My understanding is their cost of production around the $57 or $58 mark, US dollar marks, and at the moment the iron ore price is probably smack bang on that. I just wouldn't be getting into a single commodity producer at this stage, particularly in the iron ore, where we've seen such a big influx of supply come online and much more to come with Gina Reinhardt and things like that still to come online there.
Yeah, absolutely. Roy Hill, that was just what I was going to pick up on as well. Mr. Flanagan also saying today that he's seeing constant declines in stockpiles in China, which would suggest an increased demand for iron ore going forward as they work to restock. But I guess in this environment, in a low price environment, how important is the marketability of your iron ore? Because why would China, I guess, work to restock those stockpiles with Atlas iron ore instead of Rio Tinto's or BHP or Gina Reinhardt's?
Well, it just comes down to the quality of the iron ore. It also comes down to the infrastructure, how quickly you can get it all to market. I understand Atlas Iron, they've been ramping up their production, which is a good thing, but in the end of the day, they're ramping up their supply and production to a market that doesn't really want the commodity as much. That's why the prices come down. Demand is staying fairly constant or only growing less than the supply is increasing. So it's just a tough space to be in at the moment. There probably will be a point one time down the road, whether that's in 6 months or a year, where it does reach its marginal cost of production. That's the price of iron ore, that is. Where you might want to start looking at some of these players, but I probably would start with a lot of the more established and larger diversified players than something like Atlas Iron that's been really pummeled into submission.
Michael Wayne from Kodari Securities. Always appreciate it, Mike. Thank you again.
No, not a problem. Thanks for having me.